Welcome back to the Luna Rivera Crypto Podcast. Today we're diving into Hyperliquid, and I can already tell you this episode is going to be fire because Hyperliquid is the one name everyone is throwing around right now. If you have been watching DeFi markets, if you've been scrolling through crypto Twitter or hanging out in Discord groups, you know the hype is real. And the question everybody has is simple. Why is this token exploding? And what makes it different from the dozens of other projects fighting for attention? Let's get into it. So first, let's talk about the basics. Hyperliquid is not just another copy-paste chain. It is a layer 1 blockchain built only for trading. That's it. No distractions, no half measures. The team asked themselves one question: how can we build the fastest, smoothest, most powerful trading engine fully on-chain? The answer was HyperBFT Consensus, a tuned-up version of hot stuff. The result is insane performance. We are talking about block finality in under 1 second. We are talking about 200,000 orders per second. And we are talking about zero gas fees when you trade. Think about what that means. For the first time ever, you can sit on a decentralized exchange and it feels like Binance or Bybit. No lag, no clunky confirmations, no crazy gas fees. Just pure trading, fully on-chain, with your keys in your control. That alone would be enough to get attention. But Hyperliquid did not stop there. Because of this architecture, the platform has already grabbed more than 70% of the decentralized perpetuals market. 70%. That is dominance. We are talking hundreds of billions of dollars in monthly trading volume, moving through a system that barely anyone had even heard of a year ago. And here's the kicker. The entire core team is maybe 11 developers, 11 people. That's not a corporation with hundreds of staff. That's a small strike team, and they have built an engine that outperforms almost everyone else in the space. That story alone fuels hype. The idea that a tiny, focused team can beat the giants? It's a narrative crypto absolutely loves. Now let's look at the token side because this is where things get even more interesting. The native token is HYPE, and what has traders excited is the design. Hype is deflationary. Every single day, part of the trading fees gets used to buy back HYPE on the open market and burn it. That means the more people trade, the more HYPE gets destroyed. Supply goes down while demand goes up. And when you combine massive trading volumes with a burn mechanism, you get one thing: constant upward pressure on the price. That's why people are calling Hype one of the most deflationary tokens in DeFi right now. Add to that the psychological effect of new all-time highs. Once a token breaks its old ceiling, traders pile in. Nobody wants to miss the next big run. We saw it when Hype pushed past $50. Suddenly, the chatter went from cautious optimism to full-blown FOMO. Analysts started drawing targets at $68, $70, even $88. And the charts back it up. All major moving averages, 20-day, 50-day, 100-day, 200-day, are sitting on buy signals. Breakouts are forming, Bollinger Bands are squeezing, and the volume profile looks bullish. In this market, technicals plus hype plus fundamentals create a rocket cocktail. And institutions have already added fuel. VanEck, one of the world's largest asset managers, went public with support. That is not a small crypto VC. That is Wall Street money saying, we like what we see. At the same time, Lion Group, a NASDAQ-listed company, shifted hundreds of millions from Solana and Sui into Hype. That's real capital rotation. And when traditional money moves like that, it creates a halo effect. Retail traders think, if the big players are in, then we need to be in too. And that is exactly what drives a feedback loop. Institutional money flows in, retail money follows, price pumps, charts, flash green, and the cycle keeps going. But we are not done. Hyperliquid is also preparing to launch its own stablecoin, USDH. And here's the part that makes it juicy. Multiple heavyweight issuers are fighting for the right to run it. Paxos, Frax, Sky, Agora, even Athena, they all want a piece. Why? Because they know a Hyperliquid stablecoin could capture billions in value. This is not just another token. This is the foundation of an on-chain economy. With USDH, Hyperliquid reduces dependence on USDC and USTT. It keeps the liquidity in its own ecosystem, and it creates a new flow of yield for holders. And because HYPE is the governance token, the stablecoin adds another layer of demand. People need HYPE to shape the rules, to capture rewards, and to position themselves in the new economy. Let's zoom out for a second and look at the wider ecosystem. Around Hyperliquid, you already find projects like Sentiment, which allows lending with perpetuals as collateral. You see Liminal, which builds delta-neutral strategies for safe yield. You see Chainsight, offering analytics for serious traders. And then there are exotic products like Ventuals, which let you trade perpetuals on pre-IPO companies, such as OpenAI or SpaceX. That's right, you can gain exposure to future giants before they even hit public markets, all through Hyperliquid. There's Theo Network, tokenizing US treasuries, and Rumple Labs, working on turning points and loyalty programs into DeFi assets. All of this activity tells one story. Hyperliquid is not just a chain, it is quickly becoming a financial hub. So what is driving the hype? It's a cocktail of narratives. First, the CFI performance in a DeFi wrapper. Second, absolute dominance in perpetual trading. Third, a deflationary token model that burns supply as volume increases. Fourth, institutional validation from VanEck and Lion Group. Fifth, a new stablecoin that could anchor billions in liquidity. And finally, an ecosystem that keeps expanding with real products, not just promises. Every one of these factors would be bullish on its own. Together, they create the perfect storm. Of course, there are risks, and I won't ignore them. Hyperliquid is still young. The validator set is small, only 16 nodes, which makes it more centralized than Ethereum or Solana. Leverage up to 50 times is powerful but dangerous. Traders can win big, but they can also get wiped out in seconds. And the system has not yet faced the kind of stress tests older chains have survived. Bugs, attacks, black swan events, all of these could happen. That is the sober side. But hype is not about balance. Hype is about momentum. And right now, the momentum is undeniable. The story is compelling, the charts are bullish, the institutions are circling, and the community is loud. Hyperliquid checks all the boxes that create FOMO in crypto. So when you ask why the price is climbing, the answer is simple. It is not just speculation. It is a mix of hard numbers, tokenomics, and powerful narratives. Hyperliquid feels like the first DeFi platform that can genuinely rival centralized exchanges in performance, and that is a story big enough to attract serious money. Combine that with a token that burns as it grows, and you get the kind of hopium people love to hold on to. That's my breakdown of Hyperliquid. Whether you believe the hype or you stay cautious, one thing is clear. This project has already made a huge mark on DeFi, and the story is still being written. Keep your eyes on it, watch the volumes, watch the burns, and see if the rocket has more fuel left. Thank you for listening to the Luna Rivera Crypto Podcast. If you enjoyed this deep dive, subscribe for more and share it with someone who loves following the next big wave in crypto.